Oil continues to slump as Russia says it will not back an OPEC call for extra oil output cuts, threatening to derail a plan by OPEC ministers for deeper reductions to cope with the coronavirus outbreak. Joining us now to discuss is Joe Cusick. He's vice president of Calamos Investments, and he's there at the CME in Chicago. We've been talking, Joe, about OPEC's sort of declining importance, and yet I guess it's important enough at the margins that if it's not going to cut, that it's a problem for oil prices.
Yeah, absolutely. I mean, we saw last night when initially the Russians said that they're just not going to follow suit with the 1.5 million barrels cuts that was proposed. You knew the non-OPEC nations this morning were going to push back as well and said that they didn't want to get theirs up to 1 million barrels a day. So, again, we're going to have to wait to see how quickly online the Chinese get before we're going to see movement in the Brent markets. You know, they're 15% of the consumption of the Brent market. So we're going to see how fast that demand destruction starts to pick back up. And but right now, there's definitely pushback within the OPEC nations.
Hey, Joe, I a little soon perhaps to talk about recovery for some of the big oil companies, but I pulled up ExxonMobil right now. It's 52-week range, $47 to $83. It's trading right now at about $47.73 with a dividend yield at almost 7%. When I bring up that dividend yield for an oil company, that might be attractive to some investors, and yet oil stocks have been, flat to underperforming for the last 5 years. What advice would you give people who would consider this as maybe a place they want to go to or maybe a place they should stay away from?
Yeah, I think you got to be careful, especially in this type of environment with volatility so high. And the fact of the matter is we don't know what the demand destruction is going to be here in the United States. Exxon, with primarily West Texas as their primary product, you see oil down to 43. This could put some more pressure on the stock, even though it has a 7% dividend. If you're going to go out and look at oil stocks right now, if you're going to buy the stocks, one thing I could tell you is sell an upside call against it. Trade off some of that upside, increase that potential dividend income by selling the calls. Then at least you're going to offset any further downside pressure on the oil stocks.
Hey, Joe, Caleb Silver from Investopedia. Beyond the step change that we've seen because of the global economic slowdown and now coronavirus, are we in just a new world in terms of oil prices, fossil fuel prices, where we should just expect lower levels, whether they're down at these levels or up just a little bit more, going forward out into the next year, 2, 5 years? Is that where we're at?
Yeah, I would absolutely say that. I mean, we've had a glut of inventory for how many years going into this crisis? So even though, and now that we have less demand, I think at this juncture, the reality is that the U.S. is a net exporter at this point in time. They're a player on the landscape. Yeah, we have a new dichotomy in the oil markets, and we should expect that we're going to have more volatility and pressure on oil prices going forward.
Joe Cusick, Vice President of Calamos Investments, joining us from the CME to talk oil prices. Thank you.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.